Hello guys, Alus FX here. We will be analyzing a Euro USD guys today. So this is where we're going to start with our analysis. We're gonna start from a daily time frame of Euro USD. So what caught my attention to this chart when it's looking like this, I was so interested when I saw this zone right here. This zone right here really got me like to be interested in this Euro USD. So I was like, okay, you know what, let me try to see if I can't take advantage of this chart when it's looking like this, because by just looking at this chart you could see what, okay, the market once rejected here. We had another rejection here, right here, and then again we had another rejection from this point right here, and then the market is currently being at this zone right here, of which it has already showing the momentum push towards the upside, of which like it shows that, okay, this has been a very good rejection as well from this point right here. So by just looking at this, and then I decided to say, okay, I'm going to look at this, usually because when the market rejects, when it rejects a certain zone and then it gives you such strong push or such strong momentum towards the upside, there's a highly possibility again that the same rejection, it can give you another strong push to all the way to the upside, but depending on the market structure though, because you also have to follow the trend of the market structure or of the bigger time frame. So this time around we're going to use a daily time frame as our biggest or the highest time frame. So we're just going to keep notes or keep this kind of information at the back of our head, that okay, there was this strong rejection zone that has been rejected. So what we need to do, we're just going to go to, because from a daily time frame, as you can see from a daily time frame, you can't really see the trend, because here it was more like an uptrend, and then the market came kind of went down, went up, going down. Now it's going to go up. You can't really say that, okay, this is a downtrend, it's an uptrend, or consolidation. You can't really say that as well, no? So what I've decided to do, ukuthi, I am going to concentrate this part of the graph, just to see like what kind of an information can I get, because maybe there might be a certain structure that I can make use of, just this high and this low right here, and then going forward, going up. Okay, so I would go to a 4 hour time frame. 4 hour time frame, I'm coming across the structure which looks like this. Remember guys, always respect the trend of that current time frame. Always respect the time frame of that particular time frame. In this case now we are on 4 hour time frame. So what are we going to respect in this time frame? We're definitely going to respect the downtrend, because the market, it is in a downtrend. Simple and straightforward, everyone can be able to see that. Okay, so how I usually do things, I mark, I look at the structure in such, with an eye of saying we've got a substructure and then we've got the main structure. Okay, I know most people when they look at the chart, they just use, they just mark most of the substructures. So I try to avoid the substructures, because the substructures at times they can make you feel like make easily to make mistake. Let me put it that way, because in this case right now you can see with these are just substructures, these are just substructures, these are just substructures, this all the way until to this point right here. So these were the substructures, so which means now the lowest point, the first lowest point that one could mark would be this one. I think I'm talking too much in such a way that I might not be able to finish with these. My recording, it's usually last about 20 minutes, but anyway, so this being my my structure is actually looking like this. So this is the structure that I'm actually having at the moment, something like this. So this is a structure that I'm currently having, more like lower low, lower low, lower high, and then the market came to create obviously this lower low right here. But within this lower low, within this downtrend here, we had this substructure which was giving us lower low, lower highs, lower lows, lower highs, lower lows, lower highs. And then as you can see, the market break above has broken above this has broken above this previous high right here. You see this high right here, the market has broken above that high from there. So that has to say something about you. I usually try to give example with a clean chart on the side of the when I'm trying to explain these things, because I know the most people, when they explain a chart to you, they would use such a clean information like this: lower lows, lower highs, lower highs, lower lows. They will usually use a clean chart like this, but the truth of the matter is that you would hardly see a chart which looks this clean. When you open the chart, it will always look in this manner. You see, it will always look like this. So you need to try to understand this so that you can make sense out of this. Yabo? So in this way, I usually try to make an example so that people can see what I'm trying to talk about. Like if you've got a lower low, a lower high, and then you have something that looks like this, of which it creates a lower low, creates a lower highs, maybe something like this again, and then it creates another lower low. Yabo? So this you should know ukuthi you should be able to see ukuthi this is a lower low, this one is a lower high, this one is a lower low, this one is a lower high, and then this one is a lower low. This is what you need to understand. So in this case right now, when the market does a break of structure of this point right here, it also it's a sign that okay, now the market, this might be the end of this impulsive move. Because remember, I always say that for you to be able to see that the certain trend, it's going to change direction, it's when the market breaks the strongest point of the market, when the market breaks above the previous strong point, because these are strong point with points or the previous lower high in a downtrend, therefore, which means now the market is going to be going towards the upside. Simple as that. So even in this one, you mustn't ignore that at the moment the market breaks above this point, therefore, which means it's going to be kind of going up, and then it might go up. But now you must remember one thing. We've got two scenarios in this case right now. When the market breaks above this high right here, which means it's going to be in a form of like it's going to be in this correction before it goes down. We're still going down even though it broke this point, because this point right here is just a lower high of this downtrend. So we're still gonna going down. But the moment the market goes and break above this previous high, therefore, which means now the market has broken the leg or the strongest part of the graph of this lower low, lower high, lower low, lower high, lower low. Therefore, which means now after breaking this, therefore that's when we're going to be considering what, that the market is definitely going up. It's definitely going to be going up. So that is very, very important. You should understand the difference of there. Okay, so now we're gonna carry on, try to explain whatsoever from the actual chart. But always remember that you would never find anything clean from the from the actual chart. That is why most people, they will forever be confusing substructures and the main structure. It is very, very important to be able to differentiate that. But always respect the current trend of where you are. Okay, for example, let's say when I say respect the current trend, I mean this. Let's say you have a structure which looks like lower low, lower high, lower low, lower high, lower low. Let's say this is what, it's a daily time frame. Let's say this is a structure that we are seeing on a daily time frame. And then when you go to 4 hour, you're starting to notice maybe a structure which looks like this on a daily time frame. This, you need to forget about the daily time frame right now, because now you are no longer in a daily time frame. Not to forget as such, to erase everything out of your mind, but have that picture. Let's say this is your downtrend. Okay, let's say maybe you drew a trend line. Maybe I want to make you guys understand what I'm trying to say to you. Let's say you've got this trend line which looks like this from a daily time frame. This is what you drew on your on your daily time frame. Definitely, you can wait, but you're gonna wait for days for the market maybe to get to this point so that you can be able to take another sell. You can wait for days, but the more you change time frames, you tend to see that no man, there is this structure right here. When I say always respect the current trend, I'm talking about this, that you're gonna go to a 4 hour time frame. You would see this, and then that will be looking something like this. So what are you going to do when the market is looking like this? Definitely you're going to throw a zone here and be like, okay, now the market, I want the market to do what? Oh, damn it, what did I do now? You'd be like, okay, you want the market to do what? To come retest this high right here, to come retest this previous high, and then buy all the way up. You can't ignore the structure, the current structure, because when I on a daily time frame, you say that this thing is a downtrend. Yes, it is a downtrend, but currently what is happening? The same thing that you can see on a 2 hour time frame. 2 hour time frame, we are seeing this, but when you go to a 15 minutes time frame, we are seeing a structure which is bullish. You can't sell big because now we are still on a bullish time structure. Therefore, always respect the current structure, even though on the higher time frame you want to take a certain direction, but respect the current direction at that particular moment. Okay, so with that information, I'm just trying to, so this is a downtrend. We can all see that this is a downtrend. Okay, the market is creating the lower lows, lower highs. But if you can have a look at now, if you can have a look at this right now, if you can have a look at this right now, right here, you would see we kind of having some sort of like a head and shoulder kind of thing. Yeah, well, we kind of having some sort of, because the market was creating a lower lows, lower high, lower low, lower low, lower high, low. This lower low, it has nothing to do with this time frame structure. It's just for of this impulsive. Okay, let me highlight it so that you can be able to see the difference. Maybe it's just this is an impulsive move, and then this is another impulsive move. Okay, so when the market breaks above the previous high of this downtrend structure of this previous impulse, then you need to act accordingly. I hope I'm not explaining one thing which is going to irritate some of you guys, because I know we are at the different levels in this live. So some of you, they're gonna be like, hey, this guy is explaining one thing a lot. I'm sorry for that, guys, but yeah, if you can be able to see that this is a shoulder, and then this is going to be your head right here. This one's going to be your head, and then this is definitely going to be your what? Your shoulder again, right here. So we've got this shoulder, head, and a shoulder of this structure of this impulsive move that we had currently. So if you have such an impulsive move, okay, let me put it this way again. For you to understand one thing, it's one of the most important things that you need to follow so that you can understand the market structure. If you are in a downtrend like this, if you are in a downtrend like this, you should understand that these are impulsive move, correction, impulsive, correction, impulsive. The moment the market does this, the moment the market does this, breaking above this point right there, therefore this automatically becomes what? Impulsive. And then you're gonna wait for what? You're gonna wait for the correction, and then another impulsive phase. Okay, so the very same thing it's happening right here. I'm gonna keep drawing these things on the side because the chart will never give you such a clean information, but you can have an idea of what I'm talking about. So as I'm telling you, this was impulsive, this was a correction, this was an impulsive. So after the market created this impulsive move which broke above the previous high point, therefore, which means this automatically becomes what? Automatically becomes impulsive, and then this become what? A correction phase. Therefore, which means if this becomes a correction phase, therefore, which means we are expecting another impulsive move. The prediction of another impulsive move, we can just be able to predict it in this manner, like, okay, the market might possibly give us something which looks like this from this highest point right here. Therefore, which means on Euro USD, we are actually expecting to see a what? To actually see a buy. That is what we are expecting to see. Someone can approach it in this manner, someone else can approach it in this manner. Let me show you how one can other person can act, other someone can look at it this way. Because I mean, we all do the same thing at the end of the day, just that the manner at which we approach the market, it's not the same. One can draw a trend line right here, be like, okay, this has been the supporting trend line, and then nakaqeda ayenzeni, I clone. We clone this, we clone this, we put it just above right here. You would definitely see okay, so the market broke above this trend line, and then now it's retesting the trend line, and then it's gonna definitely shoot up, and then not just shooting up with one confirmation, and then here's another confirmation, head, I mean shoulder, head, and then shoulder again. So we're definitely going up, so we definitely be going up from this point, going all the way up. So if we can go to maybe 2 hour time frame, if we go to a 2 hour time frame, you would see I'm definitely gonna be going with the what, with the buy from this, even this one right here, even this structure, even this retest that we've got. It's in a, it's within a certain trend, like lower lows, lower highs, lower lows, and then it's kind of pushing. So if it can break obviously above this, if it can break above this, therefore definitely this thing will be going up. If it can break above this, maybe with this zone right here, it's gonna be definitely be going up. Because I always say that respect the trend of a current structure. As long as now you understand that, okay, from a high time frame, I know this was the correction phase, but okay, from this structure that I'm currently in, okay, this was the lower low, lower low, lower high, lower low, and then the market is currently gonna go up. Even this one, you can see that we are kinda in a shape of a what, of a head and shoulder. This being the shoulder, the head. The market has got two possibilities, two possible things that it can actually do right now. If it goes and break above and have a candle closing above this thing, I would take a buy. I would definitely take a buy, to say it's gonna go all the way to where I'm anticipating the market is gonna go. Okay. Or the market is gonna do what? Or the market is gonna give me this head and shoulder. But at the back of my mind, I'm not saying this thing, if it breaks here, is gonna sell. No, I'm looking for my setups. So this can be shoulder, head, shoulder, and then the moment it comes and break at this point right here, I'm still waiting to take my buy. But my main direction for this trade, or whatever that I'm going to be taking, it is gonna be a buy. So I hope you guys do understand what I am trying to say to you right now. But Euro USD, definitely Mina, I'm going with the buy. Because even if you can just have a look at this structure right here, even if you can just concentrate on this last part of the graph, maybe this one and this one, like, you have to have so many reasons for you can be taking that trade. Even if you can use the Fibonacci retracement zone, you can see what you can stretch your Fibonacci. You can see ukuthi ikamarket yakho golden area, it has touched your golden area where the market usually takes a turn to go all the way up. So I see a Euro USD going up in the tomorrow. Let's just say tomorrow. So if the best entry that we can have so far, let's do it this way. Let's do it. Let's say two possible things can happen right here, but obviously you're not gonna enter on this one. So on this one, maybe the market, if it goes down, it can come down, give you shoulder, head, shoulder, and then starts shooting all the way up. Or, and then your entry point is going to be when the market breaks above the previous high. Remember that, because you can't just enter, because there's a possibility this zone can be rejected and the market goes down. But if it breaks right here above this high, it is not going to come down, it's going to go up. I promise you that. So this is the best possible way to enter this trade. So Euro USD, let's just wait and see what is it going to give us, whatever that we think. But if it goes down all the way down, you are safe. You did not enter the trade. Your money, you didn't lose any money. At least you are safe. So yeah, guys, if you want more of this, you're gonna find it on my YouTube channel. So this is, I've been recording all this, whatever that we are talking about right now.